Hello, I'm David Chaston with 90 at 9, brought to you by interest.co.nz. This week at Everything You Need to Know in 90 seconds at 9 o'clock. With news, this may be the week the US gets a new president, but he inherits a total economic and social mess. Around the world, car factories are closing or on reduced shifts. The problem is that semiconductor chip makers have sky-high demand from manufacturers of consumer electronics and household appliances, which are a much larger market for them than car makers, and the car makers are seriously short of supplies. Sharply reduced car production is fueling fears of a double-dip recession for 2021, both in the EU and the US, and perhaps also in Japan as well. And China is to report its 2020 GDP later today, and it's widely expected to record a 6.1% growth for the fourth quarter and an annual growth of 2.1% in 2020. In 2021, they expect growth closer to 8%. They're closing the gap on the US fast and are now expected to have a larger economy by 2028, 2 years earlier than pre-pandemic estimates. And in Canada, they're increasingly worried about surviving the next few quarters economically. The Canadian Prime Minister has instructed their government to use whatever fiscal firepower is needed over the coming weeks and months until their economy improves. But he also says they must do it in such a way as to avoid creating new permanent spending. Meanwhile, in Australia, their government isn't worried at all, saying growth there will come without any more fiscal assistance programs being required. In the US, the new administration is gearing up to launch a $1.9 trillion relief and rescue package for the US. They certainly need something dramatic. After a 1.4% fall in November, analysts had expected US retail sales to be unchanged in December. They were disappointed as the official data shows them falling 0.7% and capping a dismal year and ending with 3 straight months of retreats. Tomorrow is a public holiday in the US, so market activity will be unusually light. US Treasury 10-year yield will start today at just under 1.09% in a risk aversion tone, and the price of gold is down $19 in New York to $1,829 an ounce. Silver also fell quite sharply, down 2.8%. And oil prices are slipping to just on $52 a barrel in the US, while the international price is now just under $55 a barrel and softer for a 5th straight day. And the Kiwi dollar is much weaker today from this time on Friday at 71.3 US cents, a drop of 0.75 cents. Against the Australian dollar, we're softer as well to 92.6 Australian cents, and against the euro, we're now at 59.1 euro cents. That means our trade-weighted index is down to 72.9 and a 50 basis points retreat since Friday. Kia ora, I'm David Chaston. That was 90 at 9, brought to you by interest.co.nz.